Hello once again, I'm Kevin Turner from Real Estate Talk and welcome to the special podcast for Australian Property Investor magazine. Well, property commentators have been loudly criticising investment in property in regional areas due to some horror stories that have come out around surrounding mining towns. So does this necessarily mean that all regional areas should be no-go zones? It's certainly safer to invest in property in capital city areas where the economy is much more diverse and therefore property investment could be seen as being more stable. Well, in the April edition of Australian Property Investor magazine, you might be interested to read an article that was written about a 41-year-old investor by the name of Glenn Ryan who is bucking the trend and finding investment in property in regional areas is anything but a disaster. He joins me. G'day, Glenn. Thanks for your time.
Yeah, good morning, Kevin.
Glenn, tell me, how do you safeguard against investing in an area that's potentially so volatile?
Well, just a bit of a background on your lead-in. But basically, I've been investing for the last 10 years. I've got 14 properties, majority in regional New South Wales, one in Tasmania. And my investing has really intensified post-GFC when investing in regional New South Wales in particular has just been so affordable. But so in a way, I'm a little bit of an oddity or a curiosity, which is understandable. But what I've found in these towns that I've invested in is that if you purchase entry-level or bread and butter properties, there seems to be a general pool of tenants that look for those properties, which reduces your volatility. You've got a greater pool of tenants applying for these properties. They're not flash, but it's certainly not hard to rent them out. And these towns typically have, negligible vacancy rates, certainly less than 2% vacancy rate. So that sort of safeguards by cash flow and investment, Kevin.
Yeah. Well, when you're looking at these regional towns, Glenn, do you look for those that have a fairly diverse economy? In other words, not based just on one industry like mining?
I've found that the properties that I purchase, and hopefully Mr. Hockey's not listening, but typically Centrelink comes into play. So I've found that probably 3/4 of my tenants are reliant on Centrelink. So in a way, that's not reliant on volatility or industries. And in another way, it's sort of a recession-proof, safe business model. But of course, the capital growth kick will be if any industries near these towns do take off. And that's what I've hoped for, and that's what I've researched in. So basically the business model is that as long as I've got Centrelink, I'm okay.
So the strategy, if I could just then sort of sum it up at that point, is pretty much about constant income, but also is it coupled up with affordability?
Yeah, definitely. That's why I've been able to afford these properties. Certainly, if you just do the calculations, take out, if you want to take out a 30-year loan, borrow at 110%, it is very easy to get cost-neutral properties in regional New South Wales or Tasmania, where I've got another one. Critics of that would say, well, it's going to take forever and a day to sell these properties if you wanted to sell them. But my argument is I'd rather have an asset than have no asset at all.
Tell me, do regional investments, in your experience, you've got 14 properties, do they offer any unique challenges, or what are the advantages as you see them?
I think the main advantage is just the affordability, and because they're so affordable, you can spread your investment dollar risk by having multiple properties, and I've found over the years there's just been minimal investment activity, and you tend to be a little bit of a lone wolf, so to speak, out there. There's not much. It's not that difficult to buy the properties. There's not that much competition, so you're at a strong point with negotiating because there aren't other investors trying to buy these purchases. So it just makes it a whole lot easier.
In the article in Australian Property Investor magazine, Glenn, you hint at the fact that there have been a few trials and tribulations. I think your words were something like a bit of a rough road. What have you learnt from those experiences?
Yeah, what I've learned is because my strategy has been to purchase entry level or bread and butter properties, um, it what tends to be the issue is that they are basic houses. Okay, everything's relative. If you want to buy a house for $100,000 at second hand, there's no denying that. If you wanted to buy a house in Sydney for $700,000, well, you'd expect a superior product. So the challenge has been unexpected repairs on older properties. You've just got to have that amount of cash and be ready for the next problem that will present with an older house. But at the end of the day, if you're buying properties that cheap and they're tenanted out, I think it's a small price to pay.
Yeah. So what's next for you, Glenn? Where are you considering investing next and why?
I'm certainly casting my eye over any town in the Gunnedah Basin. About 1 week ago, there was a major announcement that Shenhua Watermark had just been given the green light from the New South Wales government to start a coal mine south of Gunnedah. So certainly anything in the Gunnedah coal basin, Gunnedah, Boggabri, Curlewis, those towns. Last couple of days, I was actually on the ground out at Gunnedah, and typically, like a lot of these towns, very small vacancy rate. It has been hit by the depressed coal market.
Yeah.
But I think coal is going to rebound, and this part of New South Wales is sort of it's the next Hunter Valley. So I'm pretty well excited about anything around Gunnedah. It'd have to be entry level. I wouldn't be going investing in a very expensive modern house out with a pool or anything like that. But
so what is entry level, Glenn?
Entry levels for me is basically 3-bedroom. Would have to have air conditioning. Typically would have old carpets in it. It'd have an old kitchen. The carport would be an advantage, and then the place would allow me just to do the basic renovations if I wanted to, re-carpet, re-kitchen, paint, nothing too amazing, and just get growth out of that.
And what price range, Glenn?
All my properties have been pretty well from the $60,000 to the $100,000 price range.
Yes. And what sort of return would you expect to get from that?
Rent-wise, for example, one in Moree. A lot of people are aware of Moree. It's quite a cash cow, but it's not hard to buy a house in Moree for, say, $100,000 and rent it out for the low $200 a week.
Yeah, that's a good return. I can see why it's attractive for you. Glenn, all the best with your investing. You make a lot of sense, and I appreciate you giving us your time. Thank you. Yeah,
just one other thing, if I could add, Kevin.
Yes.
The other thing with these towns to consider too is because of their isolation, I really believe there's actually strength in isolation. So once you get out on the ground in these towns, you start to notice that there's no new housing estates, so that collection of real estate is a valuable resource. So it sort of makes more sense too, in that you're buying an asset where potentially there's going to be no other competition built. So hopefully at the end of the day everything works out okay, and you get a bit of capital growth from neighbouring industries.
Well, thanks for that, Glenn. That last thought, I appreciate it, and great talking to you. Thanks, mate.
Yeah, thanks for the time, Kevin.